Hey, it's Clay, and this will be a video chart on ticker symbol ADMP. We will take a look at the 30-minute time frame. If you're new to charts and not sure what I mean by 30-minute, I do offer an explanation video at that link, so if you go there, I'll explain in detail. I did this analysis a few days ago, so that is where the green and red line annotations are coming from. But after today's price movement, definitely some updates here need to be made. Price really came to life. First thing, just some house cleaning. Going to go ahead and get rid of these lines. Yeah, those levels still pertain to the charts. They're just not relevant right now. And from a presentation standpoint, I don't want to risk causing clutter and confusion because there's lines everywhere. So we'll try to keep this as clean as possible going forward. The first update, though, that does need to be made is based on a foundational rule in charting, which states when levels of resistance are broken and closed above, you want to see them act as support. So 80 cents now going to be one of the newest areas of support. Although given that purple line is so close to it, and I'll talk about that here in a little bit, what I'm going to do here is just actually adjust this level up to what I would now call the ideal level of support, right up there at 90 cents. Ideal meaning for Clay, what would make this chart look the absolute strongest going forward? Definitely if the price can stay up above 90 cents. With that being said, it's not like if the price falls below 90, that implies everything's destroyed or ruined or anything like that. But yeah, if the price could manage to stay above there, that would definitely be a big sign of power. Now, taking a step back and looking at everything from the larger time frame, that is where this purple line here does come into play, the 50-period simple moving average. Keyword being moving. So as the rest of this week plays out, that line is going to move itself higher and higher. So a very basic yet highly effective way to judge the health of the move. That right there is how I am defining the move. Just watch that purple line. As long as the price stays above that line, as the line itself moves higher and higher, then the bulls are in full health, the bulls are in full control. However you must visualize that, that is what is being represented. Again, yeah, staying above 90 would be great, but from the grand scheme of it all, as long as the price is above that purple line, the bulls 100% own the chart. What about levels of resistance moving forward? Nothing fancy or complicated here, but the price got rejected several times right there at the round number of $1, which isn't too shocking. Granted, at this point, the price actually did get above it, but that didn't last very long, and then the price fell back below it. Then after that, it being the dollar mark, went right back to acting as resistance. So that dollar mark, definitely the near-term level of resistance. But all in all, resistance levels don't matter. What do I mean by that? Well, what matters the most is what the price has already been doing, and that is this right here. As long as the price continues to chip away and build those higher bases, or if you want to picture these as stair steps. So as long as the stair steps continue to be built in the upwards direction, then given it enough time, everything else will eventually take care of itself, including breaking levels of resistance. So focus on those, chipping away and building those higher bases, and just sit back and let the trend do its thing. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.